Time now for the Law Down, where personal injury attorney Brooke Goff shares insight on important legal topics. We are at the Goff Law Studios today. Brooke, thanks for having us.
Always a pleasure.
So today's topic, let's talk about auto policies, understanding them. You said that's really important for people to do.
Well, it's the one industry where people spend tons of money and they don't even know what they're buying, right? So I've done this on air many times, and I've said, hey, what kind of coverages does somebody have? Anybody random? And very few people can actually tell me, or they guess and they're wrong. So with the new year coming, I think it's the perfect time to talk about and to revisit our auto policies to make sure that you're all set for next year. And I'll tell you, most people are like, well, I have an agent for that. I have an agent for that. Well, your agent has about 2,000, 3,000, 4,000 people sometimes,
Right.
and they're just going to do what you tell them to do. And if you don't give them direction, they're going to give you a run-of-the-mill policy. I do not recommend a run-of-the-mill policy. So it's the things to look for and the things to ask for and what they all mean. So the big pieces of the policy you need to understand is liability. You caused the accident. Guys, things happen. I have a career because everybody makes mistakes, right? So I think it's important to talk about liability and what that all looks like. So this is the part of your policy that's going to come in and pay for your negligence, but it's got to be enough. So I see this all the time. I'm telling you, it's all over. Let's just pretend you own a home. Your parents bought it for you, and your house is worth, it's Connecticut, $400,000. Okay. They're driving around in a BMW that's about 60 grand, and they have 50,000 of coverage. If you hit somebody and hurt them, and they find out that, now it's hard to get at houses and equity, I get it, but they find out that you're like sitting on a pile of cash in the form of a house or any other asset, that's a problem. And a good attorney is going to be like, they have assets. We're going to squeeze them. We're going to pressure them. So you always want to have coverage that at least is the amount of assets for what you have. So money in the bank, any equity in your houses, anything like that. Okay, so that's your liability coverage. I recommend a minimum in Connecticut of 100, 300,000, but get as much as possible. I love umbrella policies, not the kind you use when it rains, right? I love an umbrella policy, but usually you need like 250,000 to get that. Guys, make some comparisons. The umbrella policies are cheap. You just got to get there. So compare what a $100,000 policy costs and then a $250 policy costs and make your choice. Underinsured, uninsured motorist coverage. So this is how you help yourself. And I always give people this extra little oomph. And somebody listened to me and they were in a bad accident and they're going to benefit as a result of that. So let me just kind of talk you through that for a second. So with underinsured, uninsured motorists, if you don't tell your agent otherwise, they're going to make that equal to your liability. But this is the coverage. If somebody hits you, what's it going to be worth to you? Really, what's it going to be worth? So is a year out of work 100,000? Is it 250,000? My recommendation is you make your underinsured, uninsured motorist policy higher than your liability.
Okay.
And it's cheaper to do that. So if you make that $500,000, you know if somebody hits you, it doesn't matter how much insurance they have, because if they hit you, you're covered under your own. Medical, and I also recommend you add conversion to your policies. It's a cheap way to get more coverage. If you're in an accident and the person has 25,000 and you have 50, the max you can get is 50 under a standard policy. You get 25 from them and then the rest of the 25 from you. Conversion means you now take that $50,000 that you have and it gets added to what the other person has. So instead of only being able to touch 50, you get to touch 75. It might not sound like a lot, but it is. And med pay coverage is the other big one. So other than collision, we all know, get the lowest deductible you can afford. If you don't have collision coverage and you're in an accident and somebody has no insurance, you're up a creek without a paddle. There's nothing you can do. So if your car warrants it, get the collision and get as low of a deductible as you can afford. But the med pay coverage is the big one, and people forget about this, and agents don't push this. Guys, it's free medical money. You know how expensive a deductible is, right? You know how expensive medical insurance is. So med pay is free medical money. So your insurance comes to the table and says, listen, Natasha bought $10,000 of med pay coverage. First 10 grand is on us. And they literally come in, and if that covers a deductible, if that covers copays, whatever, it covers bills, and it also allows you to be able to choose your choice of physician. So if you have state insurance, you know that you're very limited with who you can use. However, with this particular coverage, you get your option of provider up to the X amount of dollars, and it's cheap money. So get as much of it as you can afford, 10 grand, 25, whatever the case may be.
A lot to consider, and this is a great
Tons.
time right before the new year.
Hold your agent accountable.
Okay.
That is my mantra
That
for the
is
year.
the message
There
here.
it
Brooke,
is.
thank you so much.
Sure, of course.
If you guys would like to learn more, you can head to gofflawgroup.net. You can also go to WTNH.com. We will have the details for you there. We'll be right back.